Getting your first card is easier than most people think, if you avoid the common traps. Your first credit card approval is mostly about choosing the right lane, not having a perfect profile. Having no credit score isn't an automatic rejection, and new credit isn't the same as bad credit. You also don't need a huge income. Issuers mainly want to see you can pay. A secured card deposit isn't a fee, it's refundable collateral. Cosigners are rarely required, and you can usually apply online without a branch visit. Before you apply, make sure you meet the basic rules that trigger quick approvals or quick denials. Most issuers require you to be 18 plus, and your name, address, and ID details needs to match exactly. Income is about ability to pay, so include reliable household income you can access, not guesses. Sometimes they will ask for proof, like a pay stub or bank statement. With a thin credit file, expect smaller starting limits, and if you have no score, pick a beginner-friendly card type. The smartest move is picking an approval path that matches your situation instead of chasing perks. If you have some income and clean banking history, a starter unsecured card can work. If you're a student and eligible, a student card is built for first-time credit. If approvals are tough, a secured card lets you fund a deposit, often $200 to $500, to set your limit. Another option is becoming an authorized user on someone's well-managed card. Whatever you choose, don't pick based on flashy rewards you can't qualify for. Once you apply, the process is simple, but the outcomes can surprise you if you're not ready. A hard inquiry usually happens, which can temporarily drop your score a few points. You might get instant approval or a pending review that needs verification. If you're denied, ask for the specific reasons so you know what to fix. Starter limits are typically small, so plan spending accordingly. After approval, watch shipping timing and set up your login, alerts, and autopay right away. Most first-time card damage comes from a few avoidable habits that trigger fees and score drops. If you skip autopay, one missed due date can mean a late fee and a ding on your credit. If you carry a balance, you can lose your grace period, meaning new purchases start accruing interest. Don't confuse your statement balance with your current balance. Pay the statement balance by the due date. Keep utilization low, ideally under 30. Pay before the statement closes, and avoid rapid-fire applications that lead to denials. One late payment can stay on your credit report for up to 7 years, so autopay is non-negotiable. CreditCardAgent matches you to beginner-friendly cards based on your spending and credit profile and shows the estimated dollar impact versus what I have now. Free, takes about 3 minutes, and the link's in the description.